Who's here? I always forget how far I have to put that. I'm kind of eating a late dinner, so I'm going to be eating in your ear just a little bit. Sorry about that. Look at this, though. How can I resist? Chicken makhani. So good. Anybody out there? Hello. Anybody out there? There. Well, if nobody is here, it's fine. I have no problem kind of going over what I want to go over tonight. The heck was that? Well, I'm going to sit here and eat until 9:05. And if it says somebody's here, which you don't have to talk, you don't. I'm not making you. I'm just saying, if you want to, let me give it till 9:05. And if nobody does, I'm going to go ahead and I'm going to dive into my strategy some and how I'm going to go back to the basics. I'm going to keep it simple. And we're going to start making some monies. Sorry, I'm making fun of myself on Discord. A little spicy. Excuse me. Okay. Let's get started. I'm going to take some of my trades from... One sec. Okay. I'm going to take some of my trades just from yesterday just to kind of go through this because it's easy to use the charts that are already here. So, 112. No complications. Nothing crazy. Right off the scanner. So, let's do this. So what are we looking for? What needs to be there for us to make this strategy happen? There's George. What's up, man? It says there's somebody else here, but they're not talking. So I was going to just kind of start going over what we're going to do going forward. What we're going to really hammer down on, what we should have been doing all along. And yeah, we're going to write it down, right? I always tell people, if you can't explain to me what your strategy is, then you don't have a strategy. So that's what we're going to do. I'm going to explain to you what the strategy is, and we're going to do it, right? I'm going to show you how we do it, how I used to do it all the time, how I started to fake myself out, which is kind of what we talked about last night on the Friday night live stream, if you were there. We talked about kind of where I was in December, this past December until now. And it was really about a couple of weeks ago where I started to kind of catch on to myself. And yeah, so we're gonna. It took 8 months. It took 8 months for me to figure it out. But hey, we figured it out, right? We figured out that we were kind of stuck in this weird place. So back to basics, back to simplicity. If you really want to go back and watch some of my earliest trading, look for the MTSI trade and then look for the LYV trade and watch everything in between. That's when I just kept it simple. I traded off, everything I trade is off the scanner, but I waited for something to come up on the scanner. I waited for it to look good. I traded it. I moved on. It was that simple. There was nothing else to it. But within that, there is a strategy. So that's what we're going to talk about now. And I call it the 112 intensity strat. That's what I've always called it. So how does it start? Scanner. Unfortunately, for me, you don't probably need the scanner. But for me, the scanner literally was designed to find these plays. So scanner is number one, right? The stock has to come off the scanner. Let's do ticker off the scanner alerting. Number two, since the scanner does most of the pre-check for me, volume, and it's obviously going to be extended, making an extended move. So everything I pull up is pretty much always going to have that. But just to kind of show you, I'll pull PBI over here. Let's pull it right here. All right. So number one, ticker off the scanner. Number two, is it actually extended? That's what we're looking for, right? We're looking for an extension. So as you can see here, we had previous resistance from pre-market all the way down here. The move itself started all the way down here. Look, technically you can say it started from right there. This thing started from 560, made a move all the way up to pre-market highs at 586, and then kept on going all the way up here through 6, all the way up to 638. Now, when I first enter a trade, sorry, answering an important question. When I first entered the trade, I don't have any, like, I don't have to have a spot on the daily. I don't have to have anything special. I don't have to have a level that I'm looking to get hit to enter a trade. What I do need is fast. I need it to be nice and fast. Look at this candle down here. I bet you this candle happened pretty fast, right? Within 2 minutes, it made this move. But then look at all these candles in between. They're smaller, 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 a little bit bigger, and then boom. Look at this candle. That's fast. So Brian couldn't have explained this any better. And I went over this last night as well. This is straight from Brian. Here's what I know. What I think I see, usually if not always the top bottom. Let me extend so make sure we're seeing this whole thing. Not what I wanted to do. Font 18. What did I do? Hopefully, it's save. Why did it save that automatically? Give me a sec. Okay, we'll just do that. So here's what I know, what I think I see. Usually, if not always, the top bottoms are the fastest bar on the highest volume of the day. That is why I'm always looking for the speed of the move. Then the jiggle, which we'll get to, of the last bar line shows me where the FOMO comes in. That's where I start a trade, into the FOMO. If there is more FOMO higher, the trade gets better, and I add to a point where the trade is worth more risk. So what are we getting at here? Oops. So what we're getting at is on this candle, it was probably fast. Our last price line, it's not on here currently because it's after hour, or it's out, the market's closed. But it's coming up. It's coming up. It's coming up with the price. It's the last price. It's always showing the last price. It's moving up, and it's a line straight across, just like these yellow lines. But I have it's orange for me. So if it's going up, 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 and then it stops, and then it starts to do this, right? It's starting to jiggle. That means it's having trouble going higher. Doesn't mean it can't. It's just it's having trouble going higher. So if it was going fast, 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 market orders, FOMO, 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 and then it finally kind of hits a ceiling, and then it starts to kind of jiggle. It's people are now getting filled in between, or people are now starting to hit the bid. People are starting to sell. That's when you get in. So say I don't even remember when we entered this. Let's take a look. PBI. That's not what I meant to hit. PBI we entered at 626. So our entrance was right there. So I don't remember when. Actually, I can take a look. Oh no. Oh yeah, I do have the chart. So it looks like I hit it on the way. It looks like I hit it on. No, it looks like it's on the red candle. So I don't remember if I hit this on the way down or up or back down. I'd have to go look at the video, which you can do if you really want to. It doesn't really matter necessarily, but obviously I got it. I didn't feel the top, obviously, but I did get in near the top, right? That's pretty much what matters most. But essentially, if I got it and I ended up entering as it was coming down, that means I felt it do the jiggle up top. And as it started to come down is when I got in. I did just hit the button a little bit late. Or it could have had a spread. I don't know exactly for sure. But anyways, it doesn't matter. This is still a good entry, right? The top ended up being here. So after we get in, let's say this thing starts to, instead of having this drop, let's say it just starts to consolidate right at your entry. Well, okay. Let's pull up the daily, right? That's my thought process. So let's add this. Yes. Trade it. No. Don't trade it. I mean, that's pretty simple, right? Imagine one of those things where it's coming down. Did the scanner alert? Yes or no? No? Okay, well, don't trade it. Yes? Okay. Go to, is it actually extended? Maybe I'll make one of these. Is it extended? Yes. Okay. Trade it. Feel the top. Trade it. See. Feel the top. Wait for jiggle. I love that jiggle. Trade it. Right? That's your edge. That's your edge. Came right off the scanner. It's extended. Oh, well, let's see. Is it extended? How about we do this? Let's Control C. Yes. Then it would be, is it fast? So let's reverse these. No. Don't trade it. Yes. Is it moving fast? No. Wait until it does. Or don't trade it. Yes. Feel the top. Wait for jiggle. Trade it. That's the edge. Right there. And it's not that I don't know this. I'm trying to just type it out. And this is how you should be doing it. Okay. So now, now we go to the scenario. Did it work? Yes. Awesome. No. What is it doing? Let's come up with a couple scenarios here. Consolidating near entry. Push back through HOD high of day. I mean, really, those are the only two, right? I mean, I guess you could get a small pullback, small pullback, but not enough to take profits. So I feel like those are the three main ones. So consolidating near entry. Look for possible DT forming. Back through high of day. Same continuous. I can't type. That is not how you spell continuous. How do you spell continuous? Is it just OUS? Same continuous. Looks not right. Continuous. There we go. Same continuous move. No. Should you have cut through high of day? So I'm gonna put yes here first. Yes. Look for top. Wait for jiggle. Add scale into position. No. Should you have cut through high of day? Was this after consolidation? Did you check the daily for key levels? So what I'm getting at here is, let's go back in. Let's say you started this move right here. That's a pretty good move, right? It looks like it could have been fast here. I don't know. And it clearly came up to 612 and tried to come back down to 610, right? Only 2 cents. But it tried. So say you started it there at 610. You're absolutely wrong. and it just immediately starts to shoot up through 620 up here to 626, 627, whatever the top of this candle is, 628. To me, that's okay, right? You started early, it sucks, but it's okay, right? It's still the same move. If anything, it's just extending even more, which is giving it even more reason to give you a pullback. So the further it extends, the more likely you are to get a pretty good pullback. The less likely you are for it to just consolidate sideways once it's up top. Obviously, it does happen, but it's very, very, very unlikely. So if you got in here and it makes this move, it's okay. Just look to add. But after you add, if it starts to consolidate or even go higher, then look at the daily. Is there anything on the daily that can give you a key area, right? And look at this. There's a nice little gap fill here. So this gap fill, let's go back and get rid of all the extra lines here. We can keep that one there, previous resistance. Oh, we'll get rid of it for now. We'll keep that one because that was our entry. All right, back to the daily here. Come on, there we go. All right, so here's that gap fill. Look at that. I'm pretty positive that's exactly why I got in where I did. Because, I mean, you can't really print this. I mean, I don't even need to draw a new line because you got support here, support here. When it gapped down, you had used that as resistance on the way down. That's where it opened up. And let's see if we scroll out just a little bit more. Support, tried to use it as support here. It did try to use it as resistance a little bit right there. Tried to come back down before going through it. Used it as support there. So obviously that was a pretty key level straight across, right? I don't know if I found that on the daily before I got into the trade, but I'm pretty sure when I was in the trade, I remember seeing this because I was like, oh, this isn't a gap fill. I wouldn't be opposed if it wanted to continue all in that same move to go up towards 7, right? Because there's a bunch of key levels along the way. Look, support there, support there, support there, bunch of support here, another area here, use support there, support there, support there. So there was a bunch of levels on this daily that it would have to go through to fill that gap. And again, this is if it wants to get to these levels. However, when we're looking at this move, and we know that the odds are when it makes a move like this, you're going to get some kind of a pullback. The odds of it being able to continue all the way up to 7 are very, very, very slim, all on the same move, right? So in order for this stock to get to 7, you would need buyers to continually step in when a chart looks like this. It's just not going to happen. But what can happen is people start to sell off, people stop buying, they look for this pullback, and then they'll look to get back in for the second push, possibly up to those key areas. So what's our strategy? Our strategy is to take advantage of that, right? We find these huge intense moves. We find the tops of these moves as best as we can, and we trade them, and we take advantage of those big pullbacks that these moves give us. The faster the move, the weaker the trend. The faster that move goes up, the weaker the trend is because it moved too fast. It's going to correct itself before it has any chance to keep going higher, because you're going to run out of people that are dumb enough to keep buying when a chart looks like this. The only people that are buying this thing up here are people that are getting squeezed out of short positions, or people that are FOMOing into the trade because they don't want to miss it, because maybe they see that gap fill on the chart and they're like, holy crap, this isn't a gap fill. I need to get in before it fills it. Right? Just the idiots that think that way. Our job is to bet against them, bet against human emotions of people that don't know how to trade that well as they're hitting market orders to keep this thing going up. Eventually, you're going to run out of idiots. You're going to run out of market orders to keep pushing this thing up. And what's it going to do? If there's nobody left to buy, there's only people left to sell, that's what's going to happen. People are going to start selling. And this is what happens. You get the pullback, right? That's what we're here to take advantage of. We're here to take advantage of these quick pullbacks. And guess what? A lot of times you get even bigger pullbacks. After you get like a little bit of a bounce, people buy, here's the pullback. So people are like, okay, round 2, let's go to 7. So people start to buy the dip, buy the pullback. But if you don't get enough people to step back in, this didn't pull back that far, right? It didn't even really get back half the move. So if people are like, it's still kind of high, I'm not sure, let's let it come back down a little bit more. Well, all the people that wanted it right now to go there, they bought it, right? They bought it. People start covering, people like us. So it gives you this little bit of a squeeze right back up towards high of day. And then you get sloppy seconds. You get the bouncy ball, right? The bouncy ball effect. Perfect bouncy ball picture right here, right? Get the move up. Bouncy ball gets thrown up, comes down, hits the ground, bounces up, bounces lower, bounces lower, bounces lower, bounces lower. Look how many times. 1, 2, 3, 4 bounces until it got to the bottom. And then it finally came back up. So you can make more playing the weakness of that second move. You can. But it's just to be completely honest, it's not as fun. These don't happen as often. And sometimes when you predict these, they end up going high of day. A lot of times. Not a lot of times, but I'd say it's more of a 50-50, where if you're playing these huge, fast, intense moves, these are more 80+%, where these are 50, 60%. So that's what we're looking for. So let's pull this back up. And it's the same thing. Did you check the daily for key levels? The small pullback, but not enough to take profits. This one is a tricky one because say it consolidates. Let's pull this up. Yeah, no, there's nothing wrong with that. Yeah, there are a lot of long traders that do that. They see the big pushback down. They know that the people that got short up here, they're going to look to cover on that wash, and the odds are you're always going to get this pushback up. It happens a ton, but there are times where you get this consolidation like this, and then it just keeps going lower, where you don't get that push. But yeah, a lot of people are looking for they'll look for a key level like this right here. They'll look for that to break, and they'll play that as like a breakout trade back up towards the highs. I know a lot of people that do that too. So let's say this came up and then it just consolidated, right? Let's just say it started doing this, blah, 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 and then it went higher. So right here, it does all this crap, doesn't really give you a pullback, and then it goes higher. What's the play there? This is trader dependent. If you have some big risk tolerance, like you can tolerate risk a little bit better, you don't mind taking on a little bit more risk. This chart, if this happened, would still be telling you, I'm really extended. It's just the FOMO is real. The FOMO is real in this chart, and it wants to just go higher. Well, can you trade something that does that? Can you withstand and hold on for a little bit longer? Because VWAP's all the way down here, right? It could be more like this or whatever, but it's still way down here, even though it consolidated and went higher. Now, what I'm getting at is the odds are you're still going to get a good pullback and a good representation of this. I talked about this on the stream last night as well, is Penn, right? Look, this came straight up, consolidated sideways, went a little bit higher, and then it finally gave you a pretty good pullback. Tried to go back high of day, didn't, and it came down even lower. I mean, granted, it did stay pretty far up here. If we check the fib here real quick. I mean, yeah, it came down, pretty much touched the 50 to a T, right? So it didn't really give a huge pullback, but again, if you were able to just hang in there after that little consolidation sideways, this thing was still pretty extended. However, VWAP and stuff did start to catch up to it. So there's always that, if you look at that kind of stuff, it would probably worry you a little bit. But if you can tolerate that risk, you still did get a pretty good pullback. And it really also depends, did you start the trade here or did you start the trade here, right? That matters. You started the trade here, you're probably okay giving it another leg. But if you started it down here and you added here and then you got a final add right there and this thing wants to go high of day, oops, yeah, it's like there, and there. And this thing wants to go high of day, the odds are you should probably cut it right there, right? Because your full position, you can't afford this thing to go higher, right? What if this thing goes higher and does the same thing here? You don't know that it's going to do this. This is obviously all hindsight. But you have to, that's where managing a trade comes into play. So let's go back to PBI. All right, so where are we at? Risk tolerance. And yeah, none of us are Brian, man. That dude is nuts. All right, let me make sure. Let's see where we're at. Consolidate. Oh, that was right. So now what if we get this? Comes up, starts to come back down, comes back down here, starts to consolidate, comes back up, tries to come back down lower again, bites through that previous support just a little, comes back up, and then goes high day. So let's say your entry was there. I guess I didn't really need a line. Let's say your entry was like perfect. Let's say it was right there. And then this happens. You were looking to take profits down in here. Gives you half of that, right? You're not happy with that. You wanted more. You're accepting the risk that if this thing goes high of day, so be it. To me, this is a picture perfect losing trade. You nailed the top. You have minimal risk. This thing consolidates, keeps trying to go lower, and just doesn't. And then it goes high of day. Just cut that shit. Just cut it. There is no reason to hang on to that. You had a great entry. You wanted good reward for it. It just didn't give it to you. Just cut it. Take the paper cut loss, right? Imagine if you would have started it down here, added here, and now it goes high of day. Now you're full position, and you're forcing yourself to cut it because it's part of the strategy, right? You're going to take the loss. But if this is your entry, and then it tries to do this crap and then goes high of day, who cares? Just let it. See if it'll give you another big move and look to re-enter. There is no reason to be hanging on to that entry. It was such a good entry. Just let that shit go. That's my answer to that last part. Actually, let me go put it in there. I see no point in letting that thing go. So I guess what I'm getting at is if you get a small pullback and it consolidates, but not like sideways, like it tries to come down and it just doesn't, then you're pretty much always cutting that thing. So hopefully you just have a better entry. And I mean, sitting here thinking, this is how simple it is. It really is as simple. Let's save this. So, scanner goes off, PBI. You pull it up, and it's alerting. You see the obvious previous resistance, 586. Say you pull the chart up, and it's in the middle of this candle. It's getting ready to break $6. So, it's breaking 6, comes up. You're trying to read it. Say that you felt fine here. Say you didn't even get in. Like you kind of read that, okay, 612 comes down to 610, doesn't really pull back that much. You didn't feel like it was done. This thing rips, right? You get an entry up here at 626, just like we did. Have a great entry. This thing plows back down. There you go. Winning trade. Move on to the next one. You can keep some. How you want to take profits, I tell this to everybody who asks me about taking profits. Whatever works for you. You want to take off 90% and try to let the rest go for the rest of the day to try to make more, you do it. You want to take 50% off so that you can try to make more if it continues, do it. I've done it all. If you want to take 100% and just move on to the next trade, do it. Don't. But once you take that 100%, just move on. Don't look back later and be like, oh man, look, I could have made this much money. Don't do that. That's like the worst thing you can do, because then you're giving up mental capacity on something that you shouldn't be. You should be more concentrated on finding another trade, more so than worrying about what you could have done on a previous trade. It doesn't matter at that point. You're out of the trade. Who cares, right? What I will say is I've had a lot more success taking like 75, 90% versus 50%, because if you take 50% here and then the thing goes all the way back high day and stops you out for your other 50%, it takes a good chunk out of what you could have made. It almost ends up being a break-even trade. What you could do is you take 50% and take out the rest at break even. But a lot of times your entry or your average is going to be somewhere where this bounce happens. Almost always. It happens all the time. So I found more success personally taking 75, 90% and then just using high of day for the rest. If it really wants to get there, so be it. But I'm looking for the bigger move down if I want to scale out. And Brian also says this, I believe, as well. When it comes to taking profits, yeah, here it is. You take the lock early, the trade is going to be green, but if you wait, the trade might be really green. But if you don't lock and the trade reverses, what was a green trade is now red. And he also says something about it being fast. Yeah, the reality is it depends on the price action. If the retrace is really fast, I want out faster. So like higher percentage, 75, 90, 100%. If it's grindy, a grindy retrace, I'll be more patient. So that's when he's saying he'll take like 50 and then 50 of the 50 and then maybe the rest, or just keep doing that 50 of the 50 of the 50 of the 50. So also a good strategy. So it's taking profits. It's really up to you. There's really no set way to take profits. But what I can tell you is you can't get in at 626 and take profit at 617 every single time. I mean, you can, but the risk that you're taking by getting into these trades will far outweigh the profits if you're just basically scalping these over and over again, right? You need to try to take more than the move. And a tip on that would be the fibs. I love the fibs. Go to the start of the move for the end of the move to the start of the move. So like I said before, the start of the move was here, and this thing gave back a lot. But a good guideline for these is that 38.2 line. You're on most pullbacks, you're gonna get that 38.2 line. The 50 if it's a really good pullback. And over this, it was just the stock was not meant to be up where it was. It just pulled back pretty well. So most of the time, I would say 38.2 is used the most. 50 is what I always like to shoot for. And like, let's take a look. I mean, we did it on pen, right? I would say this is more standard looking. So let's bring this down to the first move, just to show you that this thing did not pull back at all. And that's the other thing too, is you can use the fibs to kind of determine how much the stock really pulled back, right? Look at that. It pulled right back to the 23.6. And then it continued. So then we can extend the fibs up to here. And look at that. The second time it pulls back pretty much right to that 38.2 line. And eventually, after trying to go high of day, it does come down and test that 50 line. So no, I like to use the start of the overall move. So basically high of day or low of day, depending on which way you're measuring it, to where the move itself started. So like let's take a look at a different chart. Yeah, CNK. I think this one like died though, yeah. So previous resistance would be here, right? But the move itself started at the bottom of this candle. So that's where I would measure it from top to bottom. That's what I always say, from top to bottom. So top of the candle to the bottom of where it started. It doesn't have to be perfect, but I always try to just get as close as possible. I mean, as you can see, this thing just gave it all back. That was a crazy move. What was the other one? Snap. So here's another one. This is actually a good example. So previous resistance was here. So do you measure it from there? Well, the start of this move to me was right here, right? Big red candle and then just boom, right? The start of the move was right there. So let's see what happens when we draw it to there. Comes down, gets bought up pretty much before it gets to this 38.2 line, comes back up, drops down right to the 50, comes back up, tries to come lower, and then, I mean, obviously this thing was weak the rest of the day. But again, just somewhere around that 38.2 line is usually about what you get from a pullback after an extended move. It's just kind of how it is. Anything less than that is when you start to say, okay, well, we didn't really get a full pullback. I might be willing to let this thing continue, and take on some more risk, looking for the bigger pullback. If it comes down to the 38.2, that's a pretty good pullback. So if it were to go high of day there and you haven't taken any profits, well, you should be cutting a high of day. You should almost be cutting a high of day, and you should have probably taken profits at that point, unless you started this thing way early, and you might just be saying, okay, I'm just really trying to look to get break even here. The fibs are a very good guideline, and I've been using them a lot lately, just to really give me an idea of how much the move is given back, what to kind of expect from a pullback, and so forth. It's a really good indicator. It really is. But yeah, I always say top to bottom. So where did the move start and where did the move end? That's what I look for. And I mean, it really is that simple. It is. Find an extended move.
I'm having trouble connecting to the internet.
My Alexa's trying to talk to me. Find an extended move. Try to feel the top. Wait for that little jiggly. Wait for speed, right? Speed has to be there. The scarier it is, the better it is, right? That's when you're sitting there going, holy crap, what's this thing doing? That's usually when you should probably be looking to get into the trade. So, because that's when all the FOMO is happening, right? That's the FOMO. You're witnessing the FOMO, and you're like, when your emotions are like, holy crap, what's going on? That's the FOMO. People are FOMOing into this thing. So now it's your job to find out when that FOMO ends. When does it hit that top? When did the market orders stop taking out the ask and they start to fill inside the ask and the bid? And then when do they start hitting the bid? That's your entry right there. But you need that fast FOMO move to get the high percentage. Like Brian himself, he said he didn't take snap because he didn't feel it was fast enough, which, I mean, watching it back in hindsight, I felt like it was kind of fast. But I mean, I guess I can see what he's saying, because it was very like kind of up and down as it was going up. It wasn't just up, right? It wasn't just market orders going up. It was kind of like chopping its way on the way up. So it was like people were selling and hitting the ask at the same time. So that's really all I have. I mean, ask me some questions. Help me fill in the last 15 minutes here. Like, what do you want to know? Yeah, sure. DOS seems to be my specialty. A lot of people come to me for DOS questions. What do you mean smaller? Like, let me zoom out. Like this? Like they start to look like this? Like like squished together smaller this way, or like vertical, horizontal? Are you in DOS right now? All right. I'm just going to try something. So right click, go to configure, and you can mess with these margins. Do you have anything in these margins? Just something to try. The other thing you can do is see down here where it says use mouse wheel to scroll instead of zoom. Make sure that's unchecked. And then throughout the day, you could actually use your mouse wheel up and it'll get rid of, like, it'll start to zoom in towards the current candle. So it'll make your candles bigger. See how it's making them bigger as I get closer and closer? 15%. I was just thinking, say on a chart that has a lot of range, like say Snap went all the way up here and then went all the way back down to low a day, it's going to have a big range. So if your chart's trying to fit all of that in there, it can be tough. So sometimes if you just scroll in, like watch how when these candles, I get past these candles, watch how my candles get bigger right there. See how they got a little, see how they're getting bigger? One, because I'm zooming in, but two, because now the range of the chart is much smaller. It doesn't have to fit all of that in there because now the margin that we have set goes off of this candle. So once I get rid of this candle, watch what happens. See how they get bigger? Because now it's using these candles. And once I come down to here, now it's using that candle. So the candles keep getting bigger and bigger. So it really depends on just how much you're trying to fit on the charts and how zoomed in you want to be. So if you already have a good overall picture like this, you have all your lines drawn and stuff like that, technically you could just zoom in if you really want to. But me personally, I usually have my charts kind of looking like this because I don't really need to necessarily see the candles, because you're just looking for the overall move. I mean, sometimes when you scroll out, just I would even say it is here. Like, look how extended that looks, right? Like that's why zooming out is nice because you start to really see the bigger picture. But I would say try those things and see what happens. Did you get the scanner set up? Yeah, no problem. Hopefully that works. If it doesn't, maybe we'll try to figure out something else. But I think I don't really know. Besides changing your margins and zooming in, I don't really know how to make the candles bigger. The only way would be to like make your chart bigger. Like see how when I extend, so it can fit more into it. So sometimes the proportions of the charts might do it. Gotcha. Well, didn't he get you set up for the 2 weeks, George? Goose, what's up, man? We were just kind of ending the session. Well, I mean, we got 10 minutes if you have some questions. We were just kind of getting back on track here. If you want to go back and watch it, it'll pop up for you guys. Want some chicken makhani? So good. Still soaking up all that alcohol from last night. that was, that was rough. Got you, George. If you need any help, just hit me up on Discord. It's pretty straightforward. It's all the same. You just there's a couple more scans in there, and also with the team package, you'll also get the ultra scans too. So the ultra scans and the live chat room and the lounge are really the four things you would want to have up when you're just being part of the team. They're the four most beneficial thingamajiggers. Oh, dude, it's so good. See if I can give you a close up of one of the pieces of chicken with all the rice on. Oh yeah, there it is. Yeah. Last night was fun. my my liver was yo, you haven't drank this much in a while. I was telling David earlier, I don't even remember going up to bed. I just remember waking up. For what? For myself or for the market? At first I thought you meant for myself, but then you said bearish or bullish. My trades, very optimistic. Bearish or bullish, I'm done really caring about that, but I'm going to be short biased. So I'm gonna look for short trades before I look for long trades. If I can't find short trades, then I'll look at the other scanner and I'll look for some long trades. But I'm always primarily going to be looking for some short trades. On the market, though, I'm definitely bullish until we hit the all-time highs, and then after that, I think we're gonna have a nice little dip. But I'm very optimistic. I'm very excited to just get back to the basics, get back to what was working, stop trying to overcomplicate everything, and just trade. Just get out there and trade. I'm excited for that. Sorry, I keep moving the mic because I don't want to chew in your ear. You have any other questions, George? Or Goose? If not, I'm going to go ahead and go shower, actually. Had a busy day with the kiddo. It was like, it wasn't hot outside, so we were outside a lot today. And I sweat very easily anyway, but I think because it wasn't hot, I was actually enjoying being outside, and I ended up sweating more than I usually do because I was outside longer. I went to bed and decided to check on my iPad the live streaming. You were still going at it with GDT. Yeah. Yeah. I'm one of those ones where it's hard for me to leave when people are still around, because it's like I feel like it's not because I care about like any kind of monetization aspect of it, but I'm always that person that just wants to give. Like, I'm always trying to just give. So if people are still here, it's because they still are seeking something. So it's like I'm still trying to give whatever it is that they're seeking to them. But I'm getting better at just saying, hey, I should probably go to bed. Last night was obviously not one of those nights. I think what we're gonna do, we're too close to the highs here at 339.08, which I wanted to I keep trying to draw that line like perfectly, and I can never do it. I wonder if I just zoom way in. 339. Oh, I had 04. Ugh. Wonder. Let's see if we can. Come on, you guys are gonna witness this. It keeps jumping from 2 to 24. Let's zoom out a little. It likes that 2 to 24. That's frustrating. We need to find. Let's get before the dip in there. There we go. I bet that'll help. Ooh, look. Oh, I had it. I saw it. There it is. There we go. All right, right on the money. So, what I think is going to happen is we're going to go up there and we're going to test it and we're going to go through. And we're probably going to go through 340. And then, like you said, with everything else going on, I think we're going to get a big pullback. And I really think it's going to be down here to 300. Like, I really think we're going to come down and retest this support level here. Just a hunch. Just a hunch. Not saying don't bet on me, but you have the tops here. It tried to do it, it's just a key number, right? 300. And then support here. I really think we're going to get some kind of, the market has been pumped so much. It's ridiculous. I mean, we were talking about this last night. You start looking at all these other stocks. Look at what they did after the drop, right? Look at all these. They're all still down there, right? I mean, just look at them. So how is the market all the way back up at the highs? It makes no sense. So that's what I think. I hate that even with OTHC snap enable. Oh, gotcha. Wait, OTCHC snap enable. What's that? All right, George. I'll see you on Monday, man. See you in that chat room. Let's go. Yeah, we're definitely in a bubble. 100%. I 100% believe we're in a bubble, but I don't know what's going to happen with that bubble. Nobody does. Nobody at this point, nobody can predict what the market's going to do, except for, the obvious people that can't act on it, which I'm sure they do somehow. Oh, right. I remember that with Thinkorswim. I'm really surprised they don't have that as a feature on DOS. That would be so cool, right? Just make a line, and as you're dragging down, it just snaps to the top or whatever. So as you keep dragging down, you can just kind of snap to certain lines. That would be so helpful. I wonder what it would take for them to be able to do that. Maybe I'll jump on a DOS chat and ask them. But all right, man. If you wanna keep talking, hit me up in Discord. But I'm gonna get off here. I'm gonna go shower. I'm gonna eat the rest of this Indian. But if you want to keep talking about whatever, just hit me up on Discord. We'll keep talking. All right, man. Have a good night. I will. If I don't talk to you the rest of the weekend for some reason, have a good weekend, and I'll see you Monday. You too, man. Later.